The insurance clause that gets claims denied. Most people won't find it until it's too late. It's not hidden in secret. It's sitting in a document you already signed, buried in language that sounds routine until the day it isn't. Somewhere in that paperwork is a sentence that decides whether you get paid or get a letter that starts with, "We regret to inform you." Tonight we find that sentence, and I'll show you exactly where to look in yours. To understand the clause, you first have to understand the business. Insurance companies don't make money by being generous. They make money by being accurate. Every policy is a bet, priced using data on who's likely to file a claim, how often, and how much that claim will cost. Actuaries spend entire careers building models around exactly this question. If the math is done well, the company collects more in premiums than it pays out. That's called underwriting profit, and it's the first and most straightforward way insurers stay profitable. There's a second engine running quietly in the background, the float. Premiums are collected today. Claims are paid later, sometimes much later. In between, that money doesn't sit still. It's invested in bonds, markets, and other instruments, generating returns before a single claim is ever paid. Neither of these is a scandal. It's actuarial science. It's how the industry has worked for over a century, and it's disclosed in plain sight in every annual report insurers publish. But it means one thing clearly: an insurer's profit depends on paying out less than they collect, on more policyholders paying in than filing claims, and on that gap holding steady year after year. Contracts are written with that goal in mind, not maliciously, but structurally. So where does denial actually come from? Almost never fraud on the company's part. Almost always language, specific, deliberate, and legal, agreed to the moment you signed. 3 sections do most of the work. Exclusions. Situations the policy states, in writing, that it will not cover under any circumstance. These aren't hidden. They're listed, but they're long, and most people skim past them, assuming they won't apply. Waiting periods. A window of time after purchase before certain types of claims become eligible at all. Buy a policy today and some categories of coverage may not activate for weeks or months. And disclosures. Information you were required to share when you applied. What you told them, and just as importantly, what you didn't, becomes part of the contract whether you remember it or not. Miss one of these, and the denial isn't a mistake, and it isn't personal. It's the contract functioning exactly as it was written to function. Here's the part that isn't about insurance companies at all. It's about us. We don't buy insurance to read contracts. We buy it to stop thinking about the risk. The moment you sign, the anxiety turns off, and the paperwork goes into a drawer, a downloads folder, an inbox you'll never search again. That's not carelessness. That's the entire point of buying peace of mind in the first place. But it's also exactly the gap between what you think you're covered for and what the document actually says on the page. The company isn't counting on you being uninformed. It's simply not their job to make sure you read it. That responsibility, fairly or not, sits entirely with you. This is why the same story repeats across every type of policy, from health to auto to property. Someone pays faithfully for years, builds a quiet trust in the coverage, and never opens the document again until the moment they need it most. That's precisely the moment the fine print gets tested, and precisely the moment it's too late to make changes. So here's what you do tonight. 5 steps, 10 minutes, nothing complicated. 1, locate your policy. Search your email for the declarations page or find the physical packet wherever it's been sitting. 2, read the exclusions section in full. Not the summary, not the highlights. The actual list, start to finish. 3, check the waiting period. Know the exact point your coverage becomes active for the specific kinds of claims that matter to you. 4, review what you disclosed at sign-up. If something was left out, whether by accident or assumption, that's a vulnerability worth knowing about now, not during a claim when it's too late to fix. 5, call your agent. Ask them to explain, in plain language, anything you don't fully understand. Don't accept a verbal answer alone. Get it in writing, an email you can point back to later. None of this costs money. It costs 10 minutes and a willingness to actually read what you signed. The verdict. Insurance companies are not villains. They're businesses, built on statistics, pricing, and legal precision, operating in an industry that's been refined for well over 100 years. The math favors the company, not out of malice, but because that's what makes the business sustainable enough to pay out the claims it does honor, which means the responsibility for closing the gap sits with you, the policyholder, whether that feels fair or not. The consumer who reads the fine print protects themselves before the claim. The consumer who trusts the pitch alone finds out what they actually bought only after it's tested. Don't wait for a crisis to make you curious about a document you already own. Open it tonight, read the exclusions, confirm the waiting period, check what you disclosed. If anything is unclear, put it in writing before you need it to hold up under pressure.
I'm Marcus. This is Money Verdict. Check yours tonight.